Hello, Mark Sturdy here with 7 Days Ahead's multi-asset technical strategies, highlights thereof, week of 9th of December. There are no big changes. We remain a bull of the dollar against all the currencies. The most interesting, the dollar is well set to go higher already in the euro, having completed this double-headed head and shoulders reversal. We think it'll come down here further. The dollar is poised to do much the same against sterling. Sterling was a little reluctant to weaken against the dollar, but it seems to me if the market can break 134.82, this will send the sterling lower and the dollar stronger. Good important level to look at. The dollar yen stuck in a bit of a trading range short term, but long term we're very bullish of the dollar against the yen, a weakening yen going up well up towards 120, medium term, long term. So in alignment with that, we are particularly interested in the dollar against the euro and the yen, notwithstanding the fact there's a bit of a trading range short term in the yen. The long and the medium term look very, very good for a weakening yen. If we can break the level in sterling, that would be exciting short, mid and long, but it's yet to finally break. Turning to the stocks, we remain bulls of S&P, bulls of Eurostoxx 50. The Ftse is bullish short term. Let's just have a quick look at that. It's this medium and short term. We have this continuation triangle driving sterling up. We think probably as far as the highs here of 2019. We remain a bit skeptical that it can actually break above these prior highs all the way back to 2018 or early 19, I beg your pardon. No, it is 2018. All that's yet to be done. That work to get above 7,900 has yet to be done, but there's certainly a good push short and medium term. Long term, we still think it's struggling with this price action from the past. The Nikkei, as you will have remembered, we are very bullish in the long term. Here's the long term, huge reversal over many years. This is the year 2000, 20 years, massive double-headed head and shoulders reversal. We think calls it up a great deal. But in the medium and short term, of course, it's been rather both volatile and a trading range, a sideways wide trading range. And until we can break this trading range, we think on the upside, we are not short-term excited about the Nikkei. Moving on to bonds. We have been great bulls of yields in gilts, bears of price, and the other two are slightly less clear. There has been a pullback. Let's go to the gilt. We were very bullish because of the completion of this head and shoulders yield reversal, suggesting the market goes up to 1.8. But there was a big pullback in yields last week. It closed beneath the neckline, which is not good, and more or less on the long-term bear trend resistance, which is long since broken. But it should act as support. This should act as support. To remain bullish of yields, bearish of price in gilts, we would want this to bounce back. We expect it to bounce back and not establish itself beneath these two levels. So, shall we say, the yield bulls are under pressure, but for the moment, we're sticking with it. We remain big bulls of oil. There's the long-term chart. Here's the there's the long-term chart for the December contract, a little less clear than the longer one. But here is the prime mover of the bullishness, this head and shoulders reversal in oil prices, but there has been a pullback, no question about it, a pause and pullback, finding support here and on the neckline here. So from the prior high, the neckline, there's a band of support beneath the market, and there is also very short term this horizontal support from that prior high on the daily chart. We remain bullish of oil unless these levels 78, 79 are broken and held beneath. Gold is looking a little more interesting. After a long period of sideways trading throughout the end of 2020 and 2021, we are now bumping up and pushing through this diagonal. That's number one piece of evidence. There are repeated bounces off the horizontal 1725. That's a better piece of bull evidence. 1, 2, 3, 4 bounces. And if we look in the detail, we have, first of all, the shorter term diagonal broken, no question. We have a nice trigger level here. If the market can push up through 89.39, 89.36, there is something interesting going on in the gold, but not until. That would be a multiple reversal, bottom rather. You could argue it's a sort of contorted head and shoulders reversal. I don't think that's good. I think it's simply a multiple bottom. And if the market establishes itself above these 1839, 1836, that would suggest moves certainly as far as here, above between 1900 and 1950, and possibly further. So we're waiting for our trigger. There are short-term delights. The establishment through this high here, the break of this diagonal. Cautious dealers will want to wait for a break above 1840. Thanks very much.